Hi everybody, welcome to another update on the stock screener. Today we have our final battle, the battle of the giants. Pieridae Energy vs Trillion Energy, which are both my largest positions. Both are natural gas plays, but very different plays. And we need to contemplate which one is the best, because if one of them is worse than the other, then we could rebalance, for example, sell Trillion Energy and put it in Pieridae Energy, or sell Pieridae Energy and put it in Trillion Energy. And I'm not out of this conundrum yet. So that's why I have both. And you'll see why I'm doubting myself. I don't think we have a winner here. So both are winners, and it's very difficult to choose between the two. But first, why are we investing in natural gas? Because we have the EV boom. Everyone is going to natural gas out of oil. We have the gas arbitrage. So gas arbitrage means US gas is going up, EU gas will go down, back to each other. Here you can see oil demand going down and natural gas consumption going up. So Trillion Energy is using this EU gas price. Very high, very profitable. Pieridae Energy is using this US or ICO gas price, which is very cheap. So logic would tell us to buy this one, the Pieridae Energy, because here the gas price will go up and then Pieridae Energy will go up. But on the other hand, you have very high EU gas prices. So Trillion Energy is making a lot of money. The question is, how long can this EU gas price stay this high? We don't know. Maybe it will crash back down. I have no idea. So let's look at the charts. Pieridae Energy up, but Trillion Energy is also up, almost breaking out of the all-time high. So which one is the best? Let's go over the metrics. Both have the same market cap, 230 million CAD. So far, so good. But then we have a PE ratio of 2.5 here, and Trillion Energy, when they drill all the wells, it will have a PE ratio below 1. So that's the first thing. On a cash flow basis, Trillion Energy is much cheaper than Pieridae Energy. The question is, for how long? Second, we have 80% gas here and 100% gas here. So if you like gas, then Trillion Energy is the best. But when looking at production, this is only 5,000 BOE per day, going to 10,000 BOE per day, so low production, which means typically lower leverage. For Pieridae Energy, we already have 40,000. So if you want leverage, Pieridae Energy is better. Debt-wise, we have a lot of debt here, and here we don't have any debt. So Pieridae will give you financial leverage, but of course less growth in drilling because they need to pay the debt. But this will anyway give you 20% increase per year, just because the interest is so high. Decline rates are different. I think Trillion Energy has a very high decline rates. Pieridae Energy has almost no decline rates. So here Pieridae wins. CapEx is a bit the same, but Trillion Energy could reduce CapEx in the future if they don't grow that fast anymore. So it depends. So capex is a bit the same compared to market cap as well, but not compared to the production. Operating cost is very low at Trillion Energy compared to the gas price in Europe, and Pieridae Energy still has high costs, but they can come down. Free cash flow here at 5 ICO is 200 million. For Trillion Energy at 5 ICO, this would be a loss-making company. But of course, in the EU, gas prices are not at 5. This one has tax pools, very good. This one I don't know. Reserves, this has very high reserves, 20 years. This one only has 2 years of reserves. That is the main problem here. They need to find more gas. They need to do more exploration. And that is the main risk here. If they can't find more wells, then that production is going to stop at some point. So that is the main problem with Trillion Energy. They don't have 20 years of reserves. So they need to hit one very good well and crank up the reserves. Royalties about the same, a bit lower with Trillion Energy. So now let's look at the valuations. So in Canada, we have currently 5 to 6 ICO gas prices, and that gives us an upside of 4x to 7x, right? 4 to 7x in this range, and at 10 ICO we could go to 15x, 20x, right? So plenty of leverage. However, at Trillion Energy, when you go to 5 to 6 ICO, you can see here 5 to 6 ICO is here. That's about 3 to 5 TTF gas per MCF. Then you have negative free cash flow. So that's here. So if Trillion Energy were to produce in Canada at 5 ICO, then this company would be loss making, couldn't make any money. But luckily they are in Turkey. And in Turkey, the gas price is currently $30 per MCF, which is about 40 CAD per gigajoules. So we are somewhere here. And here we have an upside of 220 to 1.7. So that is a 8-fold. And when you go a year later, then this can even go to 3.8 billion. So more than a 10-fold, almost a 20-fold, based on the production of 10,000 BOE per day in 2024. Then you have this line here. So that is plenty of upside if they can actually get that production going, because there's a decline curve. And they need to keep on drilling, finding more gas to keep that production high. But of course, if they can do that and find more gas and increase the 2P reserves from 2 years to 3 to 4 years, then it's possible to to get this 10x, right? So the first risk is if they can't find more reserves, then this will never be attained. Then it will be probably 5 times lower, because after 1 to 2 years, 3 years, then the gas wells will produce less. And that means that the value should be somewhere maybe 1 billion. 1 billion. So that's still 4x in a few years, but that's the first risk. If they can't find reserves, it's only a 3 to 4x in a few years, which is still good. But there's a second risk, and the second risk is that gas prices will go back down to 20 or even 15. That's also possible. These gas prices will not stay this high forever. Gazprom said that gas would go to $80 per MCF, so that's good news. But yeah, you can't predict the future. If it goes to 80, then it's very good. Then this can go even higher. You can see here, just extrapolate it. It can go much higher if this goes to 80. But if it goes to 20 to 15 US dollar per MCF, then you are talking about 20 ICO price. That's somewhere here. And then you only have an upside of maybe a double to triple, quadruple, double to a triple. Not bad to have a double and triple in a few years at lower gas prices, which is around 20, 24, 21, you know, 200 to, that's a double to a triple, quadruple, which is very good. Even if gas prices go to 20, you still have a double to triple in upside. Of course, when they can't find any reserves and gas prices go down, then this curve will go down a bit. Probably, let's say it would go down by a double, then the upside is limited. It's only a double then, mostly a triple, maximum triple, double to a triple. If they can't find any reserves and the gas price comes down back to here. That's the worst case scenario, a double. So very different companies with very different macro behind it. One is a play on a higher ICO price, which is probably very certain to happen, which can give you a lot of leverage. The other one is a company that already has a high gas price and is already undervalued, but has risks that it can't find any more reserves, and also risks that the EU gas price will eventually come down. So yeah, what do we do about this? This is a quadruple, quintuple, and in the best case scenario, tenfold. This is a at $30. This is a 5x 10x if they can find good wells, 5 to 10x, and 3 to 4x. So both multi-baggers for sure. Now another thing is this already has production. Trillion Energy still needs to drill 15 wells. They already have 2 wells in production, but there's the risk that the other wells are not going so well. So that's another risk that we need to add on Trillion Energy. Maybe their future wells are not that good. Just a speculation on that. We don't know yet. So that's the risk. Here we already know they have the production of 40,000. Okay, so conclusion is it cannot be compared. We cannot compare Pieridae energy with Trillion energy. They are too different, very different in different geologies, different markets, different growth. Yeah. So the best way to play this is just keep them both. And as a conclusion, I'll see you in the next video. Bye.